Welcome to Master Your Money, Budgeting, Saving, and Debt-Free Living. I'm your host, Nate Tanner. On this show, we use the Triggator triangle, budget, save, and pay off debt to help you build a spending plan that fits your life, grow your savings with purpose, and knock out debt with confidence. Today, we're tackling a topic that is as exciting as it is intimidating: investing. If you've ever felt overwhelmed by market hype, confused by can't miss opportunities, or just plain skeptical of anyone promising you'll be rich by next Tuesday, you're in the right place. Because here's the truth: building wealth isn't about chasing the next big thing. It's about leading with integrity, clarity, and a plan that fits your values. The Triggator way means no get-rich-quick schemes, no gambling with your future, and absolutely no sacrificing financial peace for a shot at overnight success. Let's set the stage with a stat. According to a 2025 study by the Financial Wellness Institute, 68% of Americans say that they've invested in something they didn't fully understand, often because of social media hype or pressure from friends. And of those, nearly half regretted the decision within a year. That's not just a money problem, it's a mindset problem. So what's on the agenda? We're going to walk through how to evaluate investment opportunities for alignment with your spending plan and values, avoid the hype and focus on long-term paycheck-based investing, and build wealth while staying true to debt elimination and financial peace. Because this is Triggator, you know we'll keep it real, keep it practical, and keep it fun. Think of this episode as your financial Obi-Wan Kenobi, guiding you to use the force of intentional investing, not the dark side of speculation. Whether you're just starting out, feeling burned by past mistakes, or ready to take your plan to the next level, this episode is your invitation to invest with integrity and build wealth the Triggator way. Let's get into it. Making plans, the Triggator approach to investing. Let's kick off with a truth that's as old as personal finance itself. Without a plan, there's no attack. Without attack, no victory. That's not wisdom from the trenches of Wall Street. It's a classic line from the 1986 John Cusack comedy, One Crazy Summer. And honestly, it's the kind of advice that's just as relevant whether you're dodging seagulls on Nantucket or dodging bad investment advice on social media. At Triggator, we're all about plans, and not just any plans, plans that fit your life, your values, and your season. When it comes to investing, there's no one-size-fits-all strategy. Instead, there are 3 basic plans for personal finance, each with its own strategies, steps, and values. Number 1, the secure plan. This is your financial foundation. The secure plan is all about meeting your basic needs, covering bills, keeping a roof over your head, and maintaining a steady income. It's the plan that lets you sleep at night, knowing your essentials are covered. Investments here are focused on stability and predictability. Think of it as building a financial fortress: solid walls, reliable income, and minimal surprises. Number 2, the wealth plan. Once your foundation is set, it's time to build upward. The wealth plan is about moving beyond security to financial freedom. Here, you're not just surviving, you're thriving. You have luxuries, you're debt-free, and you can truly enjoy life without money worries. Investments in this plan are designed to grow with your assets, create passive income, and give you options. It's about building a life where money supports your dreams, not your stress. Number 3, the rich plan. This is the plan for those who want to go big, maximum overdrive, legacy building, and generational wealth. The rich plan is for risk takers, entrepreneurs, and visionaries who want to create something lasting. Investments here are bold, strategic, and often require significant resources and risk tolerance. It's not for everyone, but those who choose this path, the rewards can be extraordinary. No matter which plan you're working, your investment choices should align with your values and your goals. Let's break down 4 types of investments and explore which plan they best support and what values they reflect. First, employee investments. You might be thinking, wait, how is being an employee an investment? At its core, investing is about giving up something valuable now for a greater return later. As an employee, you're trading your time, energy, and expertise for a paycheck. This is the classic secure plan move. It's reliable, low risk, and essential for most people. While unemployment can happen, steady employment is one of the safest investments you can make in yourself and your family. But here's the catch. Employee investments have a ceiling. When you trade time for money, your ROI stops when you stop working. It's a great way to shore up security, but it's not the path to wealth or legacy. Use your employment to build your secure plan, then leverage it to fund your wealth plan. Second, self-employed investments. Let me tell you about a friend of mine, a real HVAC hero. After years of working as a technician, gaining expertise, and taking on more responsibility, he realized that he had what it took to start his own company. With grit, know-how, and a dash of entrepreneurial spirit, he launched his own HVAC business. The result? He moved from secure employment to a thriving, wealth-building enterprise. Self-employment is a step up in risk and reward. You're not just trading time for money anymore. You're investing money, sweat, and sometimes sleepless nights for a chance at a bigger payoff. Some months you might lose $20,000. Other months you might make $40,000. The risk is real, but so is the potential. If your values include independence, innovation, and willingness to weather ups and downs, self-employment can be a powerful wealth-building strategy. Third, investor investments. This is where things get exciting. Investor investments. Think stocks, bonds, mutual funds, options, futures, currencies, crypto. All the engines of wealth creation. The best part, they grow while you sleep, while you're on vacation, even while you're binge watching The Office for the 10th time. But let's keep it real. Not all investments are created equal. Remember that Seinfeld episode where George gets a hot stock tip and drags Jerry into the market? Jerry bails when the price drops, but George hangs on and ends up with a windfall. The lesson? Investing isn't about chasing tips or timing the market. It's about playing the long game. Paper assets, things like stocks, bonds, and so on, are great for building wealth, especially if you're risk adverse. Automated platforms, mutual funds, and 401ks are solid options for those who want steady growth without consistent oversight. If you're more adventurous and have a solid exit strategy, you can take calculated risks for bigger rewards. Just remember, you're not Warren Buffett yet. Physical assets like real estate, precious metals, and collectibles offer another path. Real estate is the classic example, but liquidity and risk can vary widely. One rental property might be a gold mine. Another could be a money pit. The key is to know your market, understand your risks, and align your investment with your values. And then there are what we call other investments. Intellectual property, carbon credits, notes. Think George Lucas selling Star Wars to Disney. It's not paper, it's not physical, but definitely valuable. Fourth, business investments. This is the holy grail for the rich plan. Business investments are about creating something that grows without your constant involvement. Maybe you buy an automated car wash, maybe a limited partner in a medical practice, or even your own franchises to pull in 6 figures a week without flipping a single burger. Business ownership can have a high barrier to entry though. Think about it. It's $2 million for a McDonald's franchise, but the potential for passive income and legacy building is unmatched. If your values include leadership, impact, and long-term vision, this is where you can build generational wealth. Bringing it all together. No matter which investment path you choose, remember these key facts. All investments carry risk. You can lose money and you can make money. Education is essential. Know your investment or pay an advisor who does. You don't have to be a stock market expert to own a 401k, but you should understand the basics. I want to just quickly hit on paying an advisor that does. Free advice is money-losing advice. Make sure that if you're going into an investment you're unsure of, you have someone who has some skin in the game with you. Evaluate, evaluate, evaluate. Don't buy Tesla stock just because you like their cars. Make decisions based on solid principles. Always have an exit strategy. Loss mitigation is a must if things go south. Investing the Triggator way means leading with integrity, clarity, and a plan that fits your life. Whether you're building security, wealth, or a legacy, make sure your investments align with your values. And remember, victory starts with a plan. Avoiding the hype, why long-term paycheck-based investing wins. Let's be honest, the world of investing is full of hype. Every day, someone's promising you the next big thing. Crypto that'll moon overnight, meme stocks that'll make you a millionaire, or a friend who swears their cousin's startup is guaranteed to 10 times in 6 months. If you've ever felt the FOMO, fear of missing out, after scrolling through social media or hearing about someone's big win, you're not alone. But here's the Triggator truth. Wealth isn't built on hype. It's built on habits. The most powerful investment strategy isn't chasing trends or timing the market. It's showing up paycheck after paycheck and letting time do the heavy lifting. Why get-rich-quick schemes fail? Let's start with the obvious. Get-rich-quick schemes are everywhere. From secret stock tips to can't-miss real estate deals. The promise is always the same. Easy money, fast. But as the old saying goes, if it sounds too good to be true, it probably is. Remember that scene in The Office when Michael Scott gets sucked into a pyramid scheme? He's convinced he's found the secret to wealth, only to realize, after a little help from Jim, that he's just drawing circles that become a pyramid. That's the reality for most get-rich-quick schemes. Lots of circles, very little substance. According to a 2025 study by the Financial Wellness Institute, over 60% of Americans have lost money to high-risk, hype-driven investments in the past 5 years. The common thread? Lack of research, lack of planning, and a heavy dose of FOMO. At Triggator, we don't chase hype. We build wealth the slow, steady, and sustainable way by making every dollar count, every paycheck. Paycheck-based investing the Triggator way. So what does paycheck investing look like? It's simple but powerful. Instead of waiting for a windfall or trying to time the market, you invest a portion of every paycheck consistently, automatically, and with intention. The best place to start? Your 401k. If your employer offers a match, that's free money. Even if you're just starting out, contributing to a 401k is one of the most effective ways to build wealth over time. The magic isn't picking the perfect stock. It's showing up month after month and letting compound interest work its magic. Here's a stat to drive it home. According to Vanguard's 2025 retirement report, investors who contribute regularly to their 401k are 4 times more likely to retire with financial security than those who try to pick winners sporadically. But what if you're still working on debt? At Triggator, we believe in prioritizing debt elimination before ramping up risk. That means focusing on your spending plan, knocking out debt, and building your peace of mind funds. Once you're debt-free, you can expand your investment options, IRAs, brokerage accounts, real estate, and more. Keeping reserves for high-risk investments. Let's talk about risk. It's easy to get excited about a can't-miss opportunity. maybe a property with Airbnb potential, or a hot new tech stock. But before you dive in, ask yourself, do I have reserves? Imagine this for just a moment. You found the perfect Airbnb property. The numbers, they look great. You've calculated the vacancy rate, and you've even set up an alligator fund for the maintenance. You close the deal, pop the sparkling cider, and start booking your guests. Then disaster strikes. The water heater bursts. It floods your property and causes heavy damage. Now insurance covers some of it, but you're still on the hook for a $2,500 deductible. And then another $2,500 to replace the water heater. Bookings, they're canceled while you're doing the repairs. The income, it dries up, and the mortgage still needs to be paid. Here's where Triggator planning shines. Because you followed your Triggator triangle, you had $15,000 set aside in reserves. You sail through the repairs, cover the mortgage, and get back to making passive income. No panic, no debt, no sleepless nights. This isn't just a hypothetical. According to a 2024 survey by the National Association of Realtors, over 40% of new real estate investors faced unexpected expenses in their first year. And those without reserves were twice as likely to take on new debt or lose their investment. The psychology of long-term investing. Long-term investing isn't just about money. It's about mindset. It's about resisting the urge to chase every shiny object and focus on what works. Consistency, patience, and planning. Think of it like planting a tree. You don't dig it up every week to check the roots. You water it, protect it, and let time do its thing. The same goes for investing. The Triggator way is about planting the seed with every paycheck, nurturing your plan, and letting your wealth grow slowly, steadily, and with integrity. And if you've ever felt tempted by the hype, remember the words of Warren Buffett. The stock market is a device for transferring money from the impatient to the patient. At Triggator, we're in it for the long haul. Practical steps for hype-free investing. Automate your investments. Set up automatic contributions to your 401k, IRA, or brokerage accounts. Build your reserves. Before taking on high-risk investments, make sure you have enough set aside for emergencies, repairs, and unexpected expenses. Evaluate every opportunity. Don't invest based on the hype, tips, or FOMO. Do your research, run the numbers, make sure it fits your plan. Prioritize debt elimination. The less debt you have, the more freedom you have to invest, and the less risk that you carry. Stay patient. Wealth is built over years, not days. Trust your plan, trust the process, and let time work for you. Investing with integrity means saying no to the hype and yes to habits. It means building wealth one paycheck at a time, keeping your reserves strong, and never sacrificing financial peace for a shot at quick riches. That's the Triggator way. Build wealth while staying true to debt elimination and financial peace. Let's circle back to our earlier Seinfeld reference. Remember Jerry obsessively checking his stock tip, flipping through the paper at every possible moment, hoping for a different outcome. To make matters worse, Kramer's heckling him from the sidelines, adding insult to injury. That's not financial peace. It's financial anxiety. If your investments have you channeling your inner Jerry, glued to your phone, stressed out and hoping for a miracle, it's time to hit pause and rethink your approach. Investing, it should be fun, exciting, and aligned with your values, not a source of constant worry or regret. Giving into FOMO or making uneducated investment decisions is a recipe for stress, sleepless nights, and bad weekends in Vermont checking every paper hoping the numbers magically changed. The Triggator way is about building wealth with integrity, clarity, and most importantly, peace. The scuba diving principle, preparation before action. I want to take just a moment to talk a little bit about one of my favorite activities outside the world of finance, scuba diving. I got into it in college when it was offered as a PE credit. I loved it so much I got certified and have been hooked on it ever since. During your certification, you learn a lot about safety. Things like how to retrieve your regulator if it gets knocked out, how to read charts and calculate safe ascent rates to avoid dangerous levels of nitrogen buildup in your bloodstream. These lessons were life-saving for me. On a dive in Grand Cayman, I was descending to 100 feet when my weight belt started to slip. Right as I reached depth, it fell off, and I shot towards the surface like a cork. At 100 feet, your body is pressurized like a can of soda. Ascend too fast, and it's like shaking that can and popping the top. The risks: burst lungs, heart attacks, bubbles blocking your bloodstream. My training, it kicked in, and I did what I learned to stay safe. As a result, just a bad headache, not a medical emergency. Investing before you're prepared is like scuba diving with no instruction. You might get lucky, but the risks are real, and the consequences can be severe. Your first step in preparation is that debt elimination plan. Just as you wouldn't dive without checking your gear, you shouldn't invest without first securing your financial foundation. Debt elimination, the bedrock of financial peace. At Triggator, we believe that true wealth starts with financial peace. That means eliminating debt, building your peace of mind funds, and creating a spending plan that supports your goals. Investing is fun, but doing so prematurely, before you're debt-free or have a clear plan, can be dangerous. 401k investments are the exception. If your employer offers a match, contribute while you're working your debt elimination plan. It's a rare opportunity for free money and long-term growth. But for everything else, brokerage accounts, real estates, side business hustles you're looking to build, wait until your debt is under control. The less debt you have, the more freedom and flexibility you'll enjoy as an investor. Education, the second preparation. You don't have to be debt-free to start learning. In fact, education is your secret weapon. If paper investments, things like stocks, bonds, and mutual funds, interest you, start with paper trading. That's when you track assets in the market with play money. It's like Monopoly for grown-ups, letting you learn the ropes without risking your paycheck. And many brokerages, they offer paper trading accounts so that you can learn those ropes. If real estate is your thing, start evaluating properties, learn how to analyze deals, scouting neighborhoods, and understanding market trends. Because the more you know, the better prepared you are when it's time to invest for real. Remember, investing is a skill. The more you practice, the better you get. And when you're finally debt-free, you'll be ready to hit the ground running, confident, educated, and prepared. Don't jump in prematurely. It's tempting to dive in when you see a deal of the decade. But as Dolph DeRoos famously said, the deal of the decade comes around about once a week. There's always another opportunity. Don't let FOMO push you into a decision that you're not ready for. Instead, focus on preparation. Build your debt elimination plan, educate yourself, and wait for the right moment. When you're ready, you'll recognize good deals, and you'll have the financial peace to enjoy them. Values-driven investing. At the end of the day, investing should fit your values. If you value security, focus on low-risk, long-term investments. If you value freedom, look for opportunities that create passive income and flexibility. If you value legacy, build a plan that supports generational wealth. Whatever your goals, make sure your investments support your vision, not someone else's hype. Financial peace isn't just about having money. It's about having confidence, clarity, and control. Let's bring it all together. If you've made it this far, you're not just curious about investing, you're ready to lead your financial life with clarity, confidence, and integrity. Today, you've learned how to make a plan that fits your values, avoid the hype, and build wealth while staying true to debt elimination and financial peace. Investing isn't about chasing every shiny object or letting FOMO drive your decisions. It's about preparation, education, and aligning every move with your long-term vision. Like a well-trained scuba diver, you're equipped to handle the unexpected, stay calm under pressure, and enjoy the journey without risking your financial health. Remember, wealth built on hype is fragile. Wealth built on habits, values, and preparation is unshakable. Today's challenge is simple but powerful. Audit your investing readiness and create your plan. Take 30 minutes to honestly assess where you are on your financial journey. Are you still working to eliminate debt? Or are you ready to start investing? Review your reserves. Do you have enough set aside to weather unexpected expenses, or would a surprise derail your progress? Map out your next steps. If you're still tackling debt, outline your payoff strategy. Decide what your wealth plan looks like. If you are feeling the drive, decide what a rich plan would look like. If you're ready to invest, decide how much each paycheck you'll contribute and which accounts or assets fit your values. Make a commitment to one thing you'll do this week to move closer to your investing goals, whether it's learning, saving, or automating your first contribution. Then act on that commitment. Preparation is the foundation of financial peace. When you audit your readiness and create a plan that fits your life, you're not just investing, you're leading your money with confidence. I absolutely loved diving into investing integrity today. I did this by reading your submissions, hearing your stories, and answering your questions. It's the heartbeat of this show. While this episode wasn't a mailbag, every topic that we explore comes from listeners just like you. Your courage, your wins, and your honesty are what make the Triggator community so powerful. If you've got an investing win, a question, or a money moment that you want to share, send it in. You might just hear it on a future episode. Make sure that you email it to me at podcast@Triggator.com, or you can message me on Instagram, Facebook, or X at Triggator. If this episode helped you feel more confident about investing and reminded you that you're not alone in your journey, follow the show so that you never miss a chance to celebrate a win, ask a question, or hear how others are leading their money with the Triggator Triangle. Leave a review, especially if this episode helped you ditch the hype and invest with clarity, community, and peace. Share this episode with a friend who's feeling overwhelmed, tempted by get-rich-quick schemes, or just needs to hear that steady progress beats perfection. And of course, follow @Triggator on social media for tips, encouragement, and behind-the-scenes content that keeps the confetti flying. Next time, scam-proof your wallet. Digital transactions are everywhere, and so are scammers. Next episode, we'll show you how to outsmart fraud in a digital world, spotting the latest scams, phishing tactics, and AI-powered tricks. You'll learn practical steps to secure your accounts, protect your personal info, and build habits that keep your money and identity safe. If you want to keep your wallet scam-proof and your peace of mind intact, you won't want to miss it. Your financial journey is like a deep dive, exciting, full of discovery, and sometimes a little unpredictable. But when you prepare, stay true to your values, and invest with integrity, you don't just build wealth, you build confidence, clarity, and a legacy that lasts. So suit up, check your gear, and lead your money with purpose. The victory is in the plan. Thanks for listening to Master Your Money, Budgeting, Saving, and Debt-Free Living. I'm your host, Nate Tanner. See you next time.